Privilege for us to introduce the speaker. Thirupal Gorige is a partner of Thirupal Gorige and Associates LLP, a company secretary firm in Bangalore, dealing with various corporate law practices. He is a BCom graduate from Venkateshwar University, Tirupati, and a fellow member of the Institute of Company Secretaries of India. Having qualified in the year 2001, he was associated as a full-time company secretary with listed and non-listed companies till the year 2004. And he then started his practice in August 2004 and rendering secretarial management, financial and corporate legal services to various corporate clients and other entities. He is one of the insolvency professionals registered under IBC with the Insolvency and Bankruptcy Code of India through ICSI IB. He has handled 3 insolvency cases as of now, and he has given more than 40 voluntary liquidations. He appears regularly before the various authorities like the NCLT, Regional Director, the Registrar of Companies, the Official Liquidator, Reserve Bank of India, and that's it. He was one of the core resource person of Blue Book, ICSI Premier of Company Law, Volume 1 and Volume 2, Contemporaries on Companies Act 2013, released by ICSI, New Delhi. He was also one of the research members of the Company Law Research Team constituted by the Center of Corporate Governance and Research and Training, ICSI, Mumbai, for the year 2018. He has been a speaker on various forums. He has conducted workshops, seminars, etc., organized by various institutions and organizations. Members, we present before you the speaker, Thirupal Gorige. So, time is all yours.
Good afternoon all. I'm extremely sorry for delay. I was stuck in the traffic jam. I thank the Bangalore branch of ICAI for providing me this opportunity, especially to enhance my knowledge. I don't know how much I can share. So let this be an interactive session as we are doing the audit. This is the time to audit. And this particular registration of charges and borrowings is very important concept after the IBC. Okay, so it gained momentum. Now ROC will not allow you after some time registration of charges. What is the fate of those charges? These issues we will try to discuss today. So let there be interactive session. I am happy to share with you then and then and discuss and learn from you also. Yeah, my presentation is made by my trainees, so I thank them. I don't have any copyright. If you feel it is useful, you can use it. So, as I told you, today we are just trying to understand the perspective of the registration of charges and the borrowing powers of the company. Let us get into the business right. So, the word charge in the 1956 Act was not defined. The 1956 Act, Section 125, was notifying or identifying few of the transactions which are registrable. The mean registrable means to be reported to the ROC. The word registration is there now. It is reporting to the ROC. Now also we should keep in mind same, reporting to the ROC. Here the word registration means reporting to the ROC. In 1956, 7 or 8 type of transactions were there to be reported as charges, and you all know the Form 8 and all those stuff. But in the old Act, they removed those stuff of 7 or 8 categories Instead, they brought the concept of charge, a definition in the book itself as a definition section, like 2 class 16. It says clearly, charge, it is inclusive definition. Like a means and interest or lien created on the property or assets of a company or any of its undertakings, or both, means you can create a charge on assets and charge on undertaking also, as a security, and includes a mortgage. So it is inclusive definition, means it is a means and also inclusive definition. Charge, you all know that it's basically either it can be mortgage, it can be hypothecation, it can be pledge, it can be pawn, it can be, handing over, anything could be. Charge is not, per se they are not defined. They say you are creating an interest or a lien. You all must be knowing that whenever you want to have, even for in customs, like there is a B3 bond, and you give one FD against to that, and you go to some, create a one BG with the bank, and you create a lien on the 1 crore FD. Now tell me whether that is registrable or not is the question. I've seen most of the cases they are not registered, which is illegal, which is a violation. That's the reason they say the word lien. What we are creating over the fixed deposit is a lien. We clearly write it. This particular fixed deposit is created as a lien in favor of the so and so department or so and so bank for repayment, to secure the repayment of the, or any liability arises due to the bank guarantee or the letter of credit. This particular 1 crore will be encashed. And I've seen most of the companies, they are not filing this. And banks themselves, they are not insisting. The loser is the bank. Even tomorrow, if suppose company goes for liquidation, even bank may possess the original fixed deposit with him. As a liquidator, as a lawyer, insolvency professional, I can file a case against the banker to recover that particular receipt. Mere possession or mere writing behind the fixed deposit receipt, bank will not gain anything over and above. He becomes a unsecured creditor. He will be equal to any other creditor. Of course, he will get a right to recover money from the company, but not from this particular FD.
But FD is secured, no? Secured asset, they not so.
That's what I told you. You have written, the bank himself has written lien in favor of the bank, and they are retaining the deed. Still, because it is not informed to the public. Secretly it was made. Why public office, ROC is there, tell me, it is a public office. People should know that a company is an animal, social animal, allowed to carry on certain activities. And all its organs should be reported, whether they are encumbrance or encumbrance free, those organs. Like you have fixed asset, you have vehicle, you have so and so and so and so. Are there encumbrance? You may have other public places, like you have a sub-register office where you can go and create a charge like a mortgage. It can be registered mortgage, or it can be deposit or title deed, and you can make an entry of deposit or title in sub-register, or you can go to the RTO, and in the RTO books also you can write like endorsement, like hypothecation of the vehicle to so and so bank. That is not enough to claim from the company's property. It is a void against the liquidator if company goes for liquidation. During the lifetime, that is different story. If this liquidator, they have recently modified, if you look at the section 77, it says liquidator including under the Companies Act, liquidator under the IBC also. Now see, almost all companies nowadays getting into the IBC because of the non-payment, whatever it is, this charge is becoming wide over there. Now, further to add, last 2 years I think, they have added the disclosure regulation, regulated disclosure in the balance sheet, saying that it is like a suicide note or suicide something. Like I have created a charge on the asset, however, I failed to report to the ROC. You will be writing in your notes on accounts clearly indicating who is the charge holder, what is the charge, what is the asset is given as a security, and you will endorse it like that. My name is, I am a criminal like that. That means that charge holder lost, over. And you are certifying. A chartered accountant is certifying that financial statement.
Auditor is also gone there.
No, it's not gone. What I am trying to say, it is clear that you have not filed the form. Now the filing form is limited only 120 days from the date of petition. Earlier, you know, unlimited period. After the IBC came into force, people started, especially unscrupulous person, started creating the charges over backdated with some old stamp paper. Going to the RD office, getting them revalidated. Earlier there was a concept of condonation.
Yes.
For the creation and modification, there was a concept called condonation. You can go to the RD office and RD is satisfied, he can condone it and levy some penalty. Once you pay the penalty, you will be restored back to the original creation date. And this was used, many unscrupulous person, then this IBC came in force in the year 2016. Now you must have heard why 120 days brought in. This is the situation. Now both are not interested to create the charge. You can't sleep over your right. Can you? They say, after that I will ignore your right. Statutorily they say we are giving limitation period of 120 days to inform the government. And if we don't inform, that as good as unsecured. We are facing a lot of problems nowadays because of 120 days. And you see the fee structure also. For earlier, you must have seen maximum 13 times they used to collect more than. Yeah, that's what. More than even and 1 year, like 13 months delay also, it used to be 13 like any other firm. Now, while doing this 120 days time, they made some percentage of loan. It may go up to 5 to 6 lakhs filing fees itself. If you go at the 120th day for filing that form, if the loan is something like 1,000 crores, your filing fees will be 5 lakhs or over and above. So draconian it is. You have to see that, that is the seriousness of these charges now. And moreover, in the balance sheet you are reporting these charges were created but not registered with us. Now tell me whether that banker will allow you to do banking with that when you have made that statement. Some banks are there, like private banks, ICSI, HDFC, then what is that? Access Bank. They are mostly, least bother about, even informing the charges, especially vehicles. Vehicle, and even for the working capital limits also they are not insisting. And some banks are reverse. Some banks are insisting even there is no charges created on assets. See what it says clearly? Created on the property and assets of the company. But they create on the director's asset as a collateral security. Create on the assets of the, like other company. But they will ask us to file return here. File here. But no document will be there. It will not satisfy the definition of charge. But still they will insist. Because in the form, in the old charge 8 and also the current form of form charge 1, there is a one column. In that column it says whether titles are in whose name, whether you have any interest in that property. Fill over there. It is fine. Okay. That idea of titles over the other name, the whole idea is that like JVs, joint venture. In case of real estate company, the owner would have given a power of attorney in your favor and allowing you to create a charge on that particular property, even though property is not there in your name. You will create that property and you will write clearly over there, I have a share, development right, like 75% or 45% development right, I have it. So this property, undivided share of the land portion I am creating. That is exactly the charge creation is happening. To facilitate that, they have inserted these fields. But the bank understood differently. Some banks are insisting. So at least we say, boss, you at least give some hypothecation deed. Hypothecation may be whether tangible, intangible, movable, immovable, whatever it is, you add it. Like present, future, receivables, this. One deed you create so that we upload the document with the ROC. But they are not doing so. But we are uploading. And few banks are, going extreme. They don't create any document, but they will ask us to file the form only based on the sanction letters. The sanction letter will have what is going to be created as a security. Say, oh, list is there, no, you fill this list over. If the document is not there, it is not a creation. First, you have not created a charge. If you have given understanding to the banker that you are going to create the charge. I have seen many charges. We do a lot of such reports from day in, day out. You don't find any supporting document except sanction letter. Bank also filing, they are also filing. What we can do, and professional also certifying. And if it is find wrong certification, 5 lakhs is the penalty now for professionals. Not small money. And very, very draconian these provisions. So one should be very careful. Now ROC started, now I think from 16th of this month, next month, tomorrow onwards, they are going to do online adjudication. And the adjudications will pick up from the online by the AI, not the current ROC, your ROC. Like you have find the form something and yourself acknowledge. Like one form I can tell you, like MGT 7, that is an annual return. At column number 11 of MGT 7, you will say that are there any non-compliances? And you yourself will admit it. Over, you will get a shock order. So what I am trying to say now, it is too technical now. And once you get a so-called notice, ROC says, I don't have anything in my hand except levying the minimum penalty that is there. Minimum penalty. Out of 470 sections, almost all sections they converted into only penalties. No adjudication. No, what is that? No compounding. Only compounding or some 25 sections are there. Balance all adjudication. This chapter also is in adjudication. Recently in one case, they levied 5 lakhs. Very pathetic situation. So again in Karnataka, I should not tell much. From 5th to February 2026, 4 onwards, there is a revision of the stamp duties.
Yes.
I give an example. I think I see how draconian it is. See, one of my client has 5 properties. Out of 5, 4 properties are in outside Bangalore. That is outside Karnataka, like AP, Telangana somewhere. And one property worth 50 crores also included in that particular sanction letter. And they created one common, what is that called? Letter evidencing deposit of tax deeds. Okay? Letter evidencing deposit of tax deeds. It contains all 5 properties. Okay? And we have paid the stamp duty since it was executed at Hyderabad somewhere. So they paid around 10 lakhs stamp duty. And it was done. And it was sent to the local office of the bank. They found it was not, stamp duty not paid in the Karnataka. Because there is a one property in Karnataka, you have not paid the stamp duty. In Karnataka, the property value is only 50 crores. The loan value total is 1000 crores. The stamp duty is 5%.
Oh my God.
5% of the
1,000 crore.
loan amount, not the property value. It comes around 5 crores. And there is no upper limit. Earlier upper limit was there, up to 10 lakhs was there. Now that upper limit was removed. 5 crores. But property itself is 50 crores only. Because when you create charge, they take only loan, not the property value, for the basis of the charge, stamp duty purpose. Now when we approach the sub-registrar of concern, he says, you have 2 options. Either you pay 5 crores, or you split your hypothecation deed into not the properties. You see, for this property, how much loan you have taken. Only that much you write. So that I will collect only 5% value of that loan as my stamp duty. So this is again, now we advise them, if possible, you ask your banker, create 2 deeds, not 1 deed. One for your outside Karnataka, outside them, and this also don't mention 1000 crores. Mention, if you mention 1000 crores, gone. You have to pay full. Straight away, they will say 5% due to 1000 crores. Huge property. Huge means government revenues are huge. Similarly, when incorporation fees is stamp duty for 1 lakh company, 10,125 rupees will come.
So that also increased.
That increased, no? Earlier it was 1,000 rupees was there.
2000 and 1000.
2,000 it
2000
used.
it was.
Total 3,250 something used to come for the 1 lakh company.
Correct.
Today 1 lakh or less. 10,125 is the stamp duty to Karnataka government.
10% return for the government.
They have given one rate, that minimum rate you pay this much. After that also it will go up to 5 crore something it goes.
My God.
Social welfare scheme, that's what they given while amending this. Okay. So this charge includes mortgage. Mortgage I already told you, to avoid the earlier stamp duty. Instead of creating a registered mortgage, they used to create the mortgage like a simple mortgage. Mortgage by way of depositor title deed, or mortgage by way of English mortgage, like handing over the property documents to the particular banker. Banker is to maintain it. So now that also is taxable. Unfortunate or fortunate, we don't know. There is some RBI rule. All these mortgage deeds or these hypothetical, what is that called? Letter evidence in the mortgage of the title deed should be recorded in the sub-registrar office. There we are caught. If it is not recorded in the sub-registrar office, there is no problem. Few states, people are not doing. You just create a mortgage depositor title deeds and they will issue a letter and keep in your records and inform to the ROC. Stamp duty, whatever it is, you pay it. Registration was not a mandatory. Now they made it. There is again registration fees is there. And if you go for encumbrance certificate and all, that will come over there. That is the objectivity. They say that not only at ROC office, at sub-registrar office also, you want to see this property is hypothecated or mortgaged to the so-and-so bank, for the so-and-so. That is banker interest, but we are losers. So mortgage is also very crucial. General for you, your awareness, I think mortgage is basically for the immovable properties. Or any interest in the immovable properties for the mortgage. And hypothecation is basically for the movable property, like vehicle you see, must have seen that hypothecated, like plant and machinery is an hypothecated, stock is an hypothecated, book debts are hypothecated, all those things are there. Yeah, so look at the 77. It says duty to file. Once you create a charge in your favor or anyone's favor on your asset, they didn't say that you have borrowed and created. So even you have given a security for someone's borrowing, you have to file a charge document. I have seen many cases, the company's property is given as a security for the director's loan. Director must have taken loan from bank, but company property is given as a collateral security. Company has to file the charge document. It is written clearly. See, it is once you create on your own property, it is your duty to file the charge document. What is the charge document? They are given whether it is situated in India, outside, property situated in India, or creation in India or outside. Wherever you create, you have been given 30 days time to upload. 30 days is for normal fees. It comes something 600 rupees will come. 30 days is the form number is the charge number 1. CAG1 the form number. If you have created a charge for the purpose of issuing of debentures, then there is a document number is the charge 9, CH9. So it should be filed in the same form. Yeah, I told process of creation is first 30 days, and after 30 days in the form itself there is a one option you have to select. The form is been filed after 30 days. Then you should give justification why you are not able to file within the 30 days. With justification you have to give. And there is some additional fees comes. After that I think 3 times of the normal filing fees will come. After 30 days or 60 days, next 120 days, depending upon the delay, it will calculate one fixed amount plus ID value duty into number of days delay. So that is the 120 days, and I told you clearly it will go to 5 lakhs also it will go based on your charge value, whatever it is. So very draconian here. Yeah, it is basically if there is a delay in filing one form, suppose both charges created and one was filed immediately, other one was filed subsequently. Subsequent registration doesn't mean that he is a subordinate. The charge holder, he will not get the Not like that, you will not get any prejudice because of the registration. Of course, ROC will give once you register. Nowadays, all you are getting certificates online only, digitally signed certificates. The Form 5 will be the format for certificate. Yeah, this is the one I was telling. If you don't file the charge document within 120 days with the ROC, after that, first of all, you can't file. That you should keep in mind. You may create another document. No, suppose hypothecation deed you have created already and you paid stamp duty. That deed and the stamp duty is no more. They are not valid. For filing with ROC, they are not valid. You may need to create a fresh and pay the stamp duty again. That is a costly affair again. We don't know how much. Even hypothecation also 5% is the stamp duty. Huge amount will come. So one should be very careful. The charge department should be very careful. Of course, I told you that liability, payment liability will come. That person will be having, suppose company goes for liquidation under 53 of IBC, there is a waterfall mechanism. Total 8 people will be there in the queue. So if you are secured, you will be in somewhere in the second queue, along with the workman. Second.
Correct.
And if you don't file this form, you have not ensured the filing of form, you will go somewhere at 5th or 6th category, the financial, normal financial debt it will come. So that is the payment position. But payment will be paid if the money is there. Yeah, this is the one again, manner of registration, filing and all. The two ways are there. One is a creation, whenever you modify it also. Modification could be anything. So amount can be increased, one modification. You are creating extra property, means additional security is provided, that is also modified. Suppose banker is changing, means someone is taking over the loan, that is also change. May not be changed like a interest rate and all is not a change. Substantial changes only should be informed with the ROC within again 120 days, because again the problem will come now. Suppose whether this change, if not informed also, is fine or not, that you have to examine. When you have created charge, okay, you file in time. But when there is something modification is there, should we need to file again charge for modification or not? It depends on you, the facts of the case. Like charge, especially the banker interest rate and all, generally we don't file any charge. Like there is a banker address change, sorry.
Terms of repayment.
Yeah, that's what you have to see. What kind of, like example I will tell you. The loan is rescheduled. You are not able to pay it before it becomes NPA, they have rescheduled. That should be informed. Because the public should know, no.
Okay.
Same, repayment it was there 6 months, 6 term loan was there, 6 years or 5 years was there. Now at the end of the 4th year you are not able to pay. It is going to be NPA. Then you negotiated with the bank and you have negotiated to for next or another 2 terms or 2 years, 2 more years. So it is repayment restructuring. That should be fine.
But similarly, rate of interest can also be restructured.
No, rate of interest, see what happened. No, in the initial document itself, they would have added one sentence. Further rates as per RBI terms and policies, this it is already covered over there. So it is a part of that only, the rate of interest is implemented. You may issue a letter that today onward this is the rate of interest, not that is the rate. I think for that you don't need to file a modification. Not.
But is it better to file it or not?
No, if you start filing everything, everything will be better only. But we don't have other that. I feel that should not be the case. You have to see the materiality. Materiality you have to see the what kind of materiality it is there. And if you want to inform, you can inform everything. But daily we can't do the same job, no.
Different things.
So you have to see that what kind of materiality is the change. They have not defined modified terms and that. What could be, that is only bankers should decide. So both modification and creation, the 120 days is the maximum time. After that you cannot file. Yeah, this is the one, 78. So where a company failed to register, the charge holder also has a power. This was not there in the old act. This is the new feature that they have introduced in the Companies Act. The banker itself can sign the form. Without the signature of the charge holder, he can file with a justification. Why? Why banker? Why the company has not filed within 30 days? So after 30th day only banker will get a right to file the charge on his own.
30 days, 50 days period.
No, 120 days will get, 30 to 120 days.
Anytime he can do it.
He can file. And he can recover all the money, whatever it is he spent for that, no, that 5 lakh can be debited to the company. Of course, your duty you are not doing, you know. Okay, so that is the one future. Earlier, they were relying on us. Now they themselves also, with their consultant, they are able to file it. Banker are able to file it. There is no problem.
No, suppose the bank doesn't file, then what will happen?
His own fate is digging what I will to tell you. Correct? No, 120 days time is given. Either the company will file or the bank will file. Bank knows it that company did not file. Knowingly they are sleeping on what we can to tell me.
But does the bank do like that?
Oh,
Bank may not do it. The problem with nowadays technical problem, the digital signature is not working. This is the one form where 3 digital signatures are there. One is the company, other one is the banker, one more consultant. And by the time you get consultant signature, form version would have got changed.
Site itself sometimes.
No, not sometimes, always. Why sometimes? If site is working, then yes, it is working, you can say, but generally doesn't work. Especially charge has lot of complexity. So many fields are there, it has to validate, and it will collect some X data, Y data, and it says it's not there. I think you have to provide the property latitude, longitude.
Yes,
Those things you provide. I don't know, tomorrow IM may come and it will go and verify also whether land is there or not. We don't know tomorrow how it is going to. Today they are asking in case of registered office purpose, professional should go and visit. And he should get certificate. In the certificate you say, I have visited the premises. But tomorrow they may ask professional photo also apart from director.
now they are asking directors.
Only director photo is being asked. Tomorrow professional. We don't know where they want to book us. They will book in any way.
They can ask us to sit along with the director.
Correct.
Above the director.
But most of the vehicle loans, the banks are not insisting on that.
Yes, sir. Banks are. Yeah, that's what I told. Especially ICICI Bank and Access Bank, and they are not insisting.
Even some NBFCs are also not
Of course,
interested.
NBFCs other fate. I have, I think, 2-3 loans like Kotak
You know, the loans on a fixed deposit, they
It's
don't.
Mahindra and Mahindra.
that is also the problem. Now see, till date, we do not have any problem being an auditor of the particular company. It is their pet both because we were not having any role to perform. Now being an auditor now, as per last 2 years, we are supposed to identify those cases report in the financial, the regulatory requirement. That is the problem now. Otherwise, simply you can ignore it. You can't ignore it now. It should be captured somewhere. In the regulatory requirement is there. This was a charge created by the company, but not informed to the ROC. That we cannot ignore. It is our duty. For not disclosing those details, and you have signed that balance sheet as an auditor, ROC is issuing notice to company as well as the auditor also. They are saying you are non-compliant of the particular disclosure requirement. Okay, but you can still say that as per your audit report, we say it is a management responsibility to maintain the books and also preparation of the financial statement as per 129. But despite of that, having witnessed the financial statement, before signing it, you have to verify it. And if you are verified, still they are not ready to disclose those details, I feel you have to report it in your report, carry on. It should be reported.
Otherwise, will disciplinary committee also come in picture?
It may not be disciplinary committee, it will go to NAFRA only. Directly. Why disciplinary committee nowadays? No, I don't think they are doing any disciplinary committee. NFRA, they are taking, very seriously they are taking.
But if the security is not the asset of the company, like third party.
That's what I told you. Why? Sir, can I sell your home? Tell me.
But banks are accepting third party security.
Bank can accept any security, no? See, as long
In that
as
case, I don't have to create charge because
not
it's not
required. That's
asset
what
of
I told you. I told you first my remark itself. Based on that sanction letter, you are creating charges. and filing the forms also. Only sanction letter, nothing you will find in it.
So in such case, charge is not created.
Not required.
Not required.
See, the definition of charge which I draw, it is clearly state that creating a lien or a right over the property or asset of the company. Like example I will give you. Holding company borrows from bank. Subsidiary gives the security. Holding company has not given security. If you look at the deposit debenture section, it allows. Holding company has not having sufficient property, subsidiary can give. I have a situation like that where holding company has only investment, no other property will be there. So instead, property is there generated at the subsidiary level. So they say we need that property as a security. It is allowed us. There is no problem. Then subsidiary should file, not the holding company, unless holding has already given any one of its property. So the crux is whose property it is. There it should be reported. It is X company property, X should report it. If it is Y company property, Y should report it. Borrower, who is borrower is irrelevant. Whether you borrow or not also it doesn't matter. If you are creating a charge for whatever the purpose, you have to file the document. So don't connect the borrowing and then it is subsequent act of the borrowing. No, it may not be. There are few situations are there. Some regular transaction purpose, they will create a charge on the property. Regular, like lien, they will create. That is also should be reported. No borrowing is there in it. Nowadays they are asking, I think we had one case, one partner that in LLP case, partner wants to create a charge on the his asset, share of the LLP. And company has not borrowed money. That means LLP also not borrowed money. Now LLP has to create that. We have to see that what kind of share is given. If it is there in the balance sheet of LLP, it should be no other option. So the property, the whole idea is that the property of the company is encumbrance or not, public should know through the MCA website. That is the one. That is the idea. Yeah, see this when the charge holder files on his own, that ROC will send 14 days notice to the company inquiring why you are not filing. And in this statement, they made it without prejudice to the responsibility of the company or the officer who is in default for not filing 30 days. They say, okay, I will take you, but I am asking you, why you are not filed the document that is being a duty you didn't file. Okay, now banker has come, I am registering. Doesn't mean that I will not go against you. Written in that section. So till they can go against the company.
Even though the charge is registered?
Yes, registered. You have violated your duty, no?
Chance is clear.
87 says we read the 87 after. Yeah, here is the banker enabled. I told you, he will debit your account. Whatever the charges, consultants fees also including. Yeah, this is the one peculiar. Suppose you are acquiring a property. Suppose some company is there in the IBC. Now you are acquiring that particular property or company. Sometimes you can acquire as a property itself. The property is already there in the name of as a security to some banks of that particular bank, particular company. And that securities also is coming with you, means you have to create a charge here. While acquiring, if it is already encumbrance property is there, you have to bring that person name in the knowledge of the others. This is the section 77. And their modification also should be informed to the others. Like one example I will give you. We have done one conversion of one partnership firm into company. Partnership firm has borrowed money from bank and given that property as a security. Now that entire partnership firm got converted into a company. So on so date it got converted. Now you acquired the property being a company. Now you have to file a charge with the MCA. The effective date of the charge or creation date will be deemed to be the date of conversion. But all old data will be there with the banker as per the original deed. Because the MCA will not allow us to give any date backdated than the conversion date. So we have filed one case. Banker insisted us to file. So we say we have filed. This is the same section. Yeah, this is another in the SCHG 7. As auditor, this register is a permanent register in the books of the company. Completely, permanently, they should maintain as long as company is there. All charge details created from the day 1 to till date. It is 30-40 years old company, they can't throw this register out. They say very clearly, the register is a mandatory and a permanent register. And after satisfaction, documents related to the charge creation and modification can be thrown away after 8 years. Means satisfaction plus 8 years. After 8 years, you can throw it off. But during the 8 years, you should maintain. After satisfaction also 8 years you should maintain. In the ROC records, after satisfaction they will maintain 15 years. As per the ROC records. 15 years they will maintain, then they will throw that file from the system. But in the company's record, you cannot throw the file. File should be there. Only the documents you can destroy. That too after 8 years. And it can be copies, etc. Everything you can do it. And this is the register where you will get the details. Tomorrow when you are writing your annual this one balance sheet and all, you are supposed to maintain the charge details also. I think how many of you doing this XBR? You know, in XBR creation you will find all these details. When you are writing a property details in any balance sheet of XBRL, you will come to know that whether this property is encumbrance or not. If it is encumbrance, we should provide the details of encumbrance completely. Like when you borrow the loan, you say whether the loan is secured, unsecured, secured of the property of the company, or secured the property of the promoters, directors, all those things you will provide. Similarly, in the property side also you have to provide whether secured or unsecured. There is a one column. So that is exactly these details you will get only from the register. Of course, anyone like member, creditor, any other person also can inspect this particular register. So as I told you, that is the register is a permanent. Yeah, see, it will serve as a constructive notice. Once you file a document with ROC related to the charge, so it will serve as a constructive notice. You know what is a constructive notice. People should be aware of it. They should be knowing that this particular land is not free of the charges. That is the reason nowadays in the old system, of course, in the V3 also, the index of charge is open to the public at free of cost. In the olden days, in the physical mode it was not there, but electronic mode they made this only for public to aware of it. These many charges are there in this particular company. Yeah, this is another satisfaction of the charge. Satisfaction of the charge, some leeway is provided. You can file in 30 days time by paying additional fees. In next 300 days time, so you can sleep over there, there is no problem. Next 300 days, you can file with additional fees alone. After 300 days only, you have to go to RD for the condonation. Up to 300 days you can file. This satisfaction, there is no problem. Okay. Additional fees, of course, is there different. Yeah, there is a one power. Recently, we are also exploring this power. ROC is aware of. See, I will tell you how ROC inspection does. When you file your balance sheet, they will go through your balance sheet, see the closing balances of the payables like borrowings, and if there are no borrowings, and when you have filed some satisfaction with NOC with current dated, you have filed one satisfaction with current dated NOC, and ROC immediately will verify that particular NOC which has no date when a full and fine settlement was made. It simply says as on this date no dues. Immediately will go back to the balance sheet after 2-3 years, and you see when it was stopped. In disclosure, from the borrowing side, and you will serve a notice on it. Misrepresentation. You have closed the charge around 2 years ago or 3 years ago, but got the letter only today, and you are filing the satisfaction today, which is illegal. They are filing prosecution also for this. Fortunately, if you file within 300 days, it may go unnoticed. After 300 days, if you file, gone. It will go for RD, no, that they will verify all these things, because ROC is supposed to provide his report. On your continuation application, ROC will provide a report saying that this charge was created on so and so day, charge was modified this many times, as per the books of balance sheet of the company filed with us, this was closed on so and so day. However, company claims or the bank gives a note NOC with the current date. Over. RD will not condone your delay. He will say it is a wrong certificate. You are not informed to the public within the time of the 30 days, 300 days and all, from the date of actual satisfaction.
So
That
here
is
the
all.
banker doesn't have power to directly file from their own.
For this satisfaction they don't have power.
Okay.
Bank has no power. They can't file satisfaction on their own. Only we are interested. Why will they file?
Correct.
They will not file. Only we are supposed to file. That's what after scrutinizing the balance sheet. This slide essence is like that. After scrutinizing the balance sheet, if it is found there is no charge, means like example Reliance. Today Reliance balance sheet is a debt-free balance sheet. But at master data, you find some charges still on. Assume that they are fund-based, not non-fund. Okay, non-fund may continue. Fund-based charges still are there. So ROC, by using this particular section, he can serve notice to the officer in default saying that why you are not filed the charge satisfaction. At master data, still charges are there, but your balance sheet, it doesn't reflect. So this is the 14 days notice they will serve to identify why you are not filed this document, especially satisfaction.
So sometimes bankers delay the NOC and all. They don't give the
That's
NOC.
what the problem with the banker. They say, I have one situation, very pathetic situation. See, there was a debenture issue, and there was a debenture trustee was appointed. Not exactly debenture, it is like a joint lending. Yeah, around 6-7 banks were there, and they have appointed one debenture trustee. Banker also filed one charge. Debenture trustee also filed one charge. 3,000 crores or something was their amount. Both 6,000 crores are appearing in the balance in the master data. And debenture trustee, since he was not performing his duties, he was thrown away. Means they have terminated the debenture trusteeship itself. And after that, one of the lender, that is the SBI, I think, they say we will act as a lead banker, we will take over the charge, all those things. So SBI started his own charge of 3,000 crores, keep on modifying 15,000. After some time, his loan was repaid, and SBI has filed the charge certificate. Whereas that trustee, it is 2011, I think, still that charge is there. And the trustee is no more. He was there only for 1 year. After that, he was thrown. And we approached the ROC, sir, this is the charge was already satisfied. This was a consortium lending, and initially trustee was appointed. 1 year after that, trustee was thrown away from system, and the lead banker started taking care of all those activities. Finally, lead banker has also filed the satisfaction. And lead banker letter also was there, and we have shown. And we have asked the lead banker to give current dated letter also. He has confirmed that yes, there was a loan, there was a trustee, there was this. And they have confirmed. We have asked the ROC to remove the trustee charge. ROC, he has a power under this section. He wrote a letter to the trustee. The company has approached us with the banker letter that they want to remove this particular charge. The trustee wrote it. There were 7 bankers. You got letter only from SBI. Please get letter from R6 fellows, 6 bankers. Loan itself is not there. Around 2011 is not a small loan now, it's 14 years ago. No one has any data. And loan was satisfied 2017 somewhere. And he was thrown away in 11 itself. Now ROC is asking, okay, do one thing, you bring all original document what you have with you as a trustee. Because he is not giving NOC to file this letter. So ROC is saying, okay, I understood from the company that you are holding the deposit of title deeds, original documents of the company. Technically, he had issued another letter in the old day. I am handing over all my files, including original documents of the property, to the SBA. I am resigning from the trusteeship like that. He had given that letter. He also has, we also have it. Despite of that, they are playing with us. So we asked the ROC, can you add this clause in your communication, so-called notice, to bring all original documents, especially title deeds. Now we have to see that. It is notice, we are waiting for hearing notice. Very funnily they act it. This banker or the trustees are very funnily they act. They don't want to take risk, that is the
Correct.
They don't want to take risk, throw it off. Throw the ball on someone's court, so they will take it, why should I? So this already I told you, manner of satisfaction, it is charge 4 form, CHG 4 and they will issue a certificate in CHG 5. Yeah, this is again in respect to charge also, charge satisfaction also. ROC has a power to remove, that's what I told you, we are using this power to remove the charges. Yeah, this is the general instruction under regulatory requirement that we should ensure while doing audit and all. This last year onwards it is there. If you see all balance sheets, no, it will be there. Whether they are total, I think 34 or 35 items are there under regulatory thing. Like this is the one among them. You must have seen that 2017 lot of companies were closed. That also they are asking. Stuck-up companies, association with the stuck-up companies, whether there are any receivables are there, whether you have to pay any money to them, give it. You know, they are given in tablet form. They want to identify any money is lying with them, or you owe some money. Government wants to recover that. That is the whole idea. So like that charges also, it is purely for the IBC purpose. They want to know from the balance sheet itself, it was not registered. That means the liquidator need not recognize this particular fellow as a secured creditor. That is the whole idea. We want to, which our record should be by the balance sheet to be filed with the ROC. And you, being an auditor, you should ensure this. Go through your company's transaction, whether there are any loans during the year, and charge document was any created, whether that same was filed within 120 days time or not. If not filed, ensure this field is filled properly. Yeah, this even Caro also there is a one para is there. There also we are supposed to make among the illustrative checklist they are given. Here it is written clearly. You should say that whether the register of charge relevant document has been examined, the charge created on the current assets. There is one more disclosure for this on current assets. Earlier we were giving CMA data to the banker and quarterly reports based on your stock performance, all those things. Now there is another requirement in your balance sheet, in your audit report also. Those quarterly report information is matching or agreement with the books on particular date. That comes as a especially this current asset, working capital loans. Because now people started, earlier they used to give projections, based on projections only, based on CMA data they used to submit it. The whole idea is that they want to really work on the actual balance sheet and provide the report based on the actual balance sheet, not the dummy, because they can't project it unwarrantedly to the bankers. That's the whole idea, and our responsibility as an auditor, we need to certify it also. Tomorrow our bank also may come, we don't know. You yourself are certifying but found it is not a deviation, whatever it is there, no, some permissible deviation is fine. Even if you go to listed company, some 10-15% deviation may be permitted. If the deviation is 200-300%, then gone, some fraud has happened. and you are not verified it like that. So here also you have to verify those evidence of, charge creation documents. Yeah, this is the one power given to the central government. Central government, you filed return, but in that there are errors. Like charge holder, name may be correct, some other details wrong, or proper details wrong. Charges were registered already. So by using this section, you can file one form CAG 8 for rectification of the errors while filing, while in the creation or in the modification. Both you can file. So if anything wrong was uploaded already, so those wrongs can be rectified by approaching the regional director. Yeah, this same this statement, all those things. Yeah, this is the contravention for charge chapter. So if you contravene the charge, anyone, like I told right beginning, within 1 month non-filing, however charge holder has filed, that is also non-compliance. And you are not at all filed, 120 days got over, that is non-compliance. You are not reported in your balance sheet, and being an auditor, we are also not reported in our CARO report about the non-reporting at the balance sheet. So any person, need not be only the company officer, even any person also they may take it, because there is a general provision 450 is there apart from this, where you have a common general where there is no specific penalties provided. 450 section is there, where 10,000 and daily some 1,000 rupees is there if it is a continued offence. So here it is for company directly they are taking 5 lakhs, for officer it will be 50,000.
It's up to 5 lakh or 5 lakh?
No, up to. Now they have removed all up tos. Under Companies Act, they removed up tos, subject to a maximum, all those words they are removed. That they, and especially in the 454, that is the adjudication chapter section, they have just said clearly ROC has no power to reduce the minimum or a fixed amount that is there. He has no power. In this case, 5 lakhs means 5 lakhs only, no other. It is like your, what is that called? TDS return is delayed, daily 200 rupees. They will calculate and collect it while filing the return over. That adjudication process 16th onwards is going to come like that only. Mechanical calculation, ROC can do only that much. He has no adjudicating power. Adjudicating power is not there. The maximum, listen you patiently, yes. I understood, sir. I understood. I want last week only. Yes, sir, I understood. But I can't do anything, sir. What I will do, tell me. I will record everything. He will record, but he will levy the same amount. Same thing here also, charge related, if they are found, any misuse are there. 5 lakhs for small company, maybe 50% will be there. 2.5 lakh will come for small company. But all other than small company, 5 lakh. Even recent instruction from RD, MCA for RDs, they say clearly, don't reduce it. Even in an appeal, don't reduce it. So they should listen to the ministry instruction. They are not reducing. Very, very pathetic situation now. So we should not commit. Yeah, if it is willful, purposefully or not by charge, then it amounts to a fraud. 447, very draconian. Up to 7 years to 12 years also imprisonment is there. If it is a fraud. Why they are brought in? Because of the IBC provisions. Frauds.
Are there any chances of amnesty schemes for?
I don't think they will bring amnesty. They will lose revenue. Why will they bring them?
But sir, for professionals at least.
Sir, under MCA is under the Ministry of Finance. You should always keep in mind. They don't want to be a company. What is that? MCA is a cost center for them. It is a revenue center for them, not cost center. That is the reason now they are collecting left and right fines. Left and right. For small violation, I think for 50 lakhs allotment, you have violated, I think they have violated 42. 1.5 crores they levied. You have to repay that money and 1.5 is the penalty. That is the section says. Companies Act is generally we don't suggest. Nowadays people are coming for very casually, to create companies. We say, boss, don't create companies. Now all startup companies, that is out of 100 companies, now only hardly 3-4 companies will survive. All will die. That is the reason, like Karta Karma Kriya, and Delhi they created recently CFACE, exit, easy exit. Companies are getting exited. I think I was told every month some 15,000 companies are created in India. Now at the same time around 6,000 to 7,000 companies are getting closed.
Yes.
At Delhi. And you have created a company, you have not commenced the business, better to close down. Not done any business, close down. And ensure that your bank account is closed, zero assets, zero liabilities. And if there are liabilities, you take the waiver, incorporate in the balance sheet, declare the profit, pay off what is that MAT or whatever it is, then go there, show that certificate, they are closing down. Even they are not insisting 2 years minimum being a defunct company. As per the rule 248, company should be minimum 2 years defunct company to close down. But now they are not insisting. You file it, ensure that no assets, no liability, no bank account. And you file latest income tax return, okay, fine. Within 3 months, you will get a certificate that your company is getting closed. That advertisement also will come in the newspaper. So that is the best thing we are advising like that one. Because we don't do, please close down. Just complexities we increase many-fold. Non-filing of the commencement form. Penalties are 1 lakh, 2 lakh. Even 1 lakh company, you will be paying the equal amount. So that's a very pathetic situation. So we'll move to the other end of the chapter. So I made it half an hour for this. So that for the one, because that is little more subject compared to this. Borrowing powers. You all know there are only 2 sections in the entire Companies Act. Section 179 3D and also one more subsection C, I think. It speaks about the issue of securities, like a debenture. Debenture is also borrowing. Other than debenture is also borrowing. So what this section says clearly, what we need to verify whenever there is a borrowing and you are verifying balance sheet of the company or books of the accounts of the company, you should ensure, is there any board resolution? First thing. It should be only in the meeting. Board resolution cannot be circular. These things you should examine. If it is not there, tell them to incorporate whatever it is. But it is a must. But board resolution need not be there for each and every transaction. It should be there at least for the between the same party for at least one time and covering the amount. And borrowing can be delegated, but they should say that whom you are borrowing and how much. Then you delegate it. So it is very section is that they say it should be only in the form of meeting and should be discussed clearly, and they are delegating. It can be through a committee, that means committee of the directors, or it can be to an executive like a managing director, whole-time director, or in case of a branch office, a principal officer of the branch can be delegated. But delegated means he has no power to how much he can borrow, where he can borrow. No. How much and where should be captured in the board meeting, in the board report. He can sign probably the application. Probably he can sign the borrowing lending agreement or whatever it is. So his power limitation of the delegation is very limited. So one should be very clear about it. And coming to the borrowings from the directors. You know that, I think you had morning chapter about the deposit. Whenever you get a director loan, you should give an undertaking saying that he has not borrowed from others.
Yes.
That also should be submitted. Each transaction he should submit. And borrowings from directors also should be covered under 179. So generally what we do, we will pass one resolution giving category wise. Yes, let us borrow the money, like one from director, one from the shareholder, one from the banks and financial institution. Generally for bank and financial institution, it will be specific resolution to the which bank that you are approaching. And after authorizing, then that authorizing person can approach the bank. Generally, the bank will put some conditions saying that with this condition I am sanctioning the loan. And he will say, please get those sanctions accepted by the board. Even the section doesn't say those sanction conditions should be accepted by the board, but it is better practice to record in the subsequent board meeting accepting those sanction limits or sanction conditions. Because you have to create charge, all those stuff, no? Again, creation of charge as per the 179(3) only, it should be only board resolution again. Charge cannot be created by passing a circular resolution. So very crucial. I have seen so many places people are without passing resolution they are borrowing left and right. And sometimes they will show, though may not be borrowing, but they will show as a borrowing money. So it is very crucial about it, having a record. Now after this particular, I will tell you, is IBC. Tomorrow your own director wants to claim that money before the IRP and RP. This all will help you. Board resolution will help you. Agreement will help you. Declaration given by the banker saying that director saying that this is not a borrowed money. But it is better practice to have one agreement. You just develop an agreement. See, company till date, whatever it is, no, it should go in writing only. Whatever the transaction you do with the company, it should go in writing. After IBC, we are finding a lot of problem. Not having proper terms, especially when you supply goods, when it is to be paid, when the amount will become due, when you are to recover the interest, at what point of time you will recover the interest. If these things are not there in your purchase agreement, or not there in your invoice, and it is very difficult to prove it before the IBC, especially judge and all, and they will not admit your case also. I am talking about the supplies that you made. Think of it, the money that you have given as a loan and guarantee, and you want to recover that money without having any document. So very crucial. At least they are asking 179(3) is bare minimum document of the board resolution, covering all the terms and conditions of the borrowing. And if your own CARO report also you should say the terms and conditions are not prejudicial to the interest of the company or prejudicial to the interest of the stakeholder. And if there are no terms and conditions, how you will certify that particular para? Is it possible to certify that para? Very difficult to certify that para. And all this forensic audit of these companies getting into IBC is very difficult now. They will ask you, auditor, provide this information, that information, when you don't have data about this, what you have verified or not. So, as per me, this borrowing power is very crucial because this is the power where, apart from the owner's capital, the borrowing capital comes through this particular channel. Like you are allowed to borrow like 1 + 2, you bring 1 rupee, you can take 100, 2 rupees under borrowing. So very crucial, anything for that matter, you borrow from bank, financial institution, director or shareholder, or even from the debentures, this resolution is must. So it should be only through the board meeting. The next one, that is section 181C. This is applicable to the public limited companies in general. However, it is exempted to the private limited companies as long as private limited company comply with the provisions of filing the annual return. They have to file the annual return in time. Annual return is no balance sheet and MGT 7, AOC 4 and MGT 7. Assume that they have not filed these 2 returns, they will lose this privilege. That means they should come back and comply with section 181. I have seen many, no one is verifying this aspect. It is written, if you go verify the exemption notification given to the private limited companies, 5th June 2015, read with 13th July 2017. In the 13th July 2017, they had added this particular para at the end of the circular. The above privileges and exemptions are subject to the compliance of the filing of annual return under section 92 and the balance sheet under section 137. there should not be any default. If there is a default, you will have to comply the entire act, being a private limited company. Assume that if there is a default, you are an auditor. That particular year, your audit will be different, not the regular audit. This is the example just now I told. So they borrowed more than, see, suppose what is 180? It says borrowing power of the board. Borrowing power of the board is there 1:1, means paid up capital, free reserves and security premium account. Equivalent amount only they can borrow without shareholders approval. 1:1 they can borrow by using the power given under section 173. If you are crossing this particular 1:1 in case of public limited company, first you should go and seek the shareholders' permission, and shareholders need not give approval for each and every borrowing, but they should fix the limit. After 1:1, how much I can borrow? And source also need not be explained to shareholder. Simply they say I can go up to 500 crores, that much. Only amount should be mentioned over there. It can be any borrowing, like it can be borrowing from banks, financial institution, or from directors, or from shareholder, or from any other body corporate. But the shareholder should have given a mandate that to prior approval. If there is a violation, then you have to comment. It is there, I think, in one of the paras you have to say whether borrowing limits are there well within the powers accepted by the shareholder. Assume that in case of private, sir, please, sir.
Temporary loan.
Yeah, see,
Yes, good.
the temporary loan under 180 they are given clearly what is temporary loan it is. Temporary loan is a loan payable on demand. Generally we say cash credit is a temporary loan. But it's very difficult to prove it. If you look at the documentation that we are creating for the cash credit and we are renewing that limit, it appears to be perpetual loan. So very difficult to prove that it is a temporary loan so that I can exclude from the 1:1 limit for public limited company or private limited company which has violated the in filing the balance sheet. So the crux is that ensure that wherever you are an auditor, let them file the balance sheet or annual return within 30 days in case of balance sheet from the AGM, within 60 days in case of annual return. But if there is a delay, during the delay, all privileges will go. Once they have filed the return, there is one section under section 454, subsection 3, and there is a proviso. They say, if ROC, knowingly a company has not filed return, ROC serves a notice, annual returns are not filed, and the company files annual return within 30 days from that so cause notice, or company has already filed before the receipt of so cause notice. They say clearly, proceedings against that adjudication of penalties. If by non-filing the balance sheet, there is a daily 100 rupees penalty. Apart from additional fees, there is a penalty also. Additional fees will be collected by filing the form. But it is adjudicatable for delay, whatever the delay you did. But that delay, they say, we will not adjudicate. If you have filed the return, we will not come behind you. But you should have filed before I issue the notice or after I issue the notice within 30 days. It may be 2 years delay, doesn't matter. During the 2 years, you cannot avail the privileges. But if you have filed, again you will restore. All privileges will come back. Nowhere is written in the law, like you will get back the restoration and all. But after seeing this harmonious construction of those provisions which they made it, it appears to be all defaults will come to an end once you file the return. And you will get back the privileges, all those advantages that are there being the private limited company. If you don't interpret this way, and privilege will die only once. Afterwards, no privilege will be there. But it cannot be. It is a socialist country. We are not into the country where, monarchy. Monarchy will have all these aspects. Ours is a socialist country. So, yes, I did commit mistake. I paid the penalty. Then I should be restored. And there is no concept of repeated offender and all here. Once you keep filing the returns with additional fees and without notice, it is okay, fine, no problem. Like 2 years you are filing the return, every year 30 days delay is there. Whether second and subsequent is also qualified for the exemption, the answer is yes. because this particular section 454 doesn't differentiate whether it is second year delay, third year delay or fourth year delay. So considering that, so assume that you all auditing, if the company has not filed return, fate of the 181C borrowing power of the board. During that year they borrowed more than paid up capital, free reserves and security premium account. Violation. Because they should have gone to the shareholders approval. And that is a special resolution. And special resolution, now of course you can file, earlier special resolutions can be filed only up to 300 days. After 300 days, system will not allow. It will not allow. System will, you can't file further. System will not allow. Very, very draconian case. They say you go for condemnation, this and that. Okay. So this is the very, very clear. So there are certain proverbs are there, like this already I mentioned you. This is already I explained you. This is the section restriction 1:1 up to you can borrow, not beyond that. Temporary loan, someone said yes, it is from banks in the ordinary course only exempted. Up to the requirement is a special resolution. So while preparing balance sheet, there are some general instructions. I think you all know that, no, whether long term, short term is used, short term is long term used. It means fund flow. If you prepare a fund flow statement, you will come to know that. Whether it is used long term, short term, all those things you will come to know that. But you have to report it here. Similarly, whether it was used for specific purpose, you are certifying it now. Think of it. So people nowadays, the whole idea is that siphoning. They want to prevent the siphoning. Now you see what is the specific purpose. I can tell you. Suppose you have borrowed money from other company. I think afternoon you are going to have a class under 185, 186. As per section 185, they say money should be used only for the principal business. Then only you can give to other company. So you have to loan where directors are interested. The purpose is what? Only for the principal business, to achieve the business. You can't give loan to other persons by taking loan from other company. So basically they want to prevent. See, one company may borrow from bank and they will give to other company. Then they will give to the individual. That they want to prevent. Giving individual is not your business. You are giving, and your balance sheet should say, 186, I think subsection 4 says clearly, you have given money to that gentleman or that particular company. What is the purpose? What they have used till date with that money? That is a one note is there. And for non-disclosing that note, recently ROC has launched prosecution. You have not made a disclosure when you have given loan to someone, that loan was used for what purpose? The disclosure should be made in it. In the XBR it comes, but in regular balance sheet, generally we don't cover that extent note. So this is the specific purpose disclosure in the annual return. So CARO also, I think you know CARO, you have to see this auditor should give the comments about those bank borrowings and financial institutions. Review whether those clauses covenants been complied with or not. All those covenants as per the banks. So again in the balance sheet disclosure, this is the security disclosure. I told the same thing, like you got a bank loan based on the current assets. Now you are giving quarterly reports of the current assets. Those quarterly reports are matching with your balance sheet for that particular quarter. You are certified now. Earlier this requirement was not there. Now we are supposed to certify that quarterly statements are matching with my books of accounts. If there are any discrepancies, you have to bring material discrepancies in your report. There are other matters are there, so many details are there. One of the disclosure, this is about the Binami transactions. Recently they have inserted this, 2021 they have inserted. This will be also CARO report in other matters. In this, you have received money, but the whole idea of receiving money to pass through that money. It may be a loan, it may be investment, it may be guarantee, it may be security. You receive that money into your balance sheet and equally you are just passing through. That means they have used you as a vehicle. Suppose I will give an example. There is a one company entity in the Mauritius or some other country or Cayman Island or some other country. They invest money in your, and in turn you will invest in somewhere or you give a guarantee security to someone. But idea is that money did not come to you. It is meant for going somewhere else, but is rooted to you. Now who is responsible? You are the responsible to report under Binami transactions. You should say who is ultimate benefiter. You are just passing through, no? Who is this particular downstream investment fellow? What is connection to them, and you have to give it in your balance sheet. I think recently that one more reporting also there, no? That when you create a companies and you maintain companies for the, on behalf of the client, as a reporting entity, we should file under Binami Transaction Act only. We are reporting entities of that. So this is another requirement to maintain. Yeah, so you have to make a statement clearly. I have seen all balance sheets of transaction. No transaction is going through that circumstance. One statement you have to give. Giving that statement is easy. Giving this statement is easy. Huh? Giving this statement is a certificate. Correct? No. You are stuck. Giving this statement is more dangerous. He is a good boy. You are giving certificate. Unless you know him only, you can give good boy. Yeah. So I don't want to give. I think there are some other financial related, borrowing related disclosures are there in balance sheet. I think we are already done the time, isn't it? Okay. So I don't want between. A few more slides only, not many are there. Yeah, one borrowing cost disclosure again in the general principle accounting policies. You should make a disclosure what is the borrowing cost you are adding to the asset or adding to the instrument. It is being whether charged to P&L account. All the disclosure should be given. Yeah, thank you. Sorry, I kept you wait for at least 7-8 minutes. So I thought of coming here. I stuck somewhere in traffic jam. Thank you very much for providing me the opportunity.
Any questions?
Yeah.
Seeing these provisions, it's very difficult to practice nowadays. Seeing
But we have to practice, no seeing or unseen, known, unknown, no option. But we are getting into very draconian, especially AI and all is there, no artificial intelligence and all. Certainly it will take you some next level of disclosure.
can increase litigations also, no sir?
All types, it will not only see if you don't have a document, how you litigate? Tell me, first of all. You should have enough document, like that audit file, all those things that you maintain, evidence that you collected, document that you have seen. Then only you can litigate. Otherwise, you have to surrender only, no other option.
Any other questions? Thank you, sir. On behalf of the Bangalore branch of SISF ICA, we thank the speaker for his excellent session, and we present a memento as a token of appreciation. We'll break for lunch and reassemble at 2:30.